Everyone to the third webinar of Streak. Wishing you everybody happy new year. This webinar is going to cover the basics of Renko, and it is purely going to focus on the Renko charts. Okay, we are going to start in a minute. If anybody is facing any issues with audio, kindly let us know in the chat right now so that we can resolve everything. Are we good to go, guys? Great. So let's get started. Again, wishing everybody a happy new year 2019. Let's get into it. So Renko charts, right? This webinar will cover first understanding Renko the right way, the right and the proper way to understand Renko, its nooks and corners, its pros and cons in depth, right? Then the second thing we are going to cover in this webinar is the strategies that can be built with Renko and thoughts that has to be put before writing a strategy with Renko. The third topic which is covered is the right brick size. So Renko, we'll cover that what brick size is, and with Renko, the trick is to choose the right brick size, and we'll cover different methods which are used. And then the last one is the pitfalls, things where assumptions go wrong, things where people miss out on understanding. That will be covered in the last section of this webinar, right? So now that everybody is here, let's get started. Before we start, this all the information seen provided here is for educational purposes only, so keep that in mind. Back test everything, make sure you are comfortable before you take any trade, right? So understanding Renko the right way, right? So what are Renko is basically a chart type. When I say a chart type, it basically means if you go to Kite and just plot that in a chart, you will be able to see Renko here. This is Renko. You can select Renko. So by default, all the charts are candlestick charts. Let me just remove this study so everything looks a bit more cleaner. Right. We'll plot those indicators once we reach the strategies part. Great. So let me just plot Renko chart and then we'll go from there. Right. So this is Renko charts. Right. So Renko charts again, like any other charts, you have to sort of look at green candles and red candles, right? So Renko, there are two bricks again, green and red. Some places show black and white in different chart settings, right? So a green Renko bar is formed when price moves up by the brick size. This is very key. You should keep this in mind, right? The green Renko bar forms when a price moves up by brick size. What is brick size? Basically, when you are setting Renko, you have to give the amount that the stock has to move for a bar to get formed, right? So let me just give you this in comparison with a normal chart, right? Great. So a normal chart basically is green or red in color whenever the close price is higher than the open price, then it is green. So here if you can see, the close is higher than open, it's a green candle. uh, Here the close is lower than open, so it's a red candle. This is very important that you digest this information, because when building strategies, close higher than open, close lower than open are very simple sounding words but can be used with extreme power. So now when you come to Renko, right, again the same thing applies. If you see a green Renko, if you see a green Renko here, right, you can see on the top left corner that uh, the close is 1272 and the open is 1271. Right now here the gap between open and close is fixed. It is exactly same as the brick size that you gave, right? The brick size which you give is given in the chart settings. There is also an auto select. We'll come to this as you go ahead, right? So green Renko bar is formed when the price has moved up by the brick size, in this case up by 1 rupee. A red Renko bar is found when the price moves down by a brick size. Okay, so now we have covered green brick and red brick. Now one key thing which needs to be kept in mind is a green after a red, okay, forms after twice the movement of a brick size. So what I mean by that is, let me just go here and show you this. So this red bar found when the price reached this bottom of the screen. If you can see here, let me try to zoom in a bit more for people who are facing difficulty visualizing it. Okay, so a red Renko bar forms when the price has moved down by 1 rupee. So in this case, open is 12,047 and close is 12,046. Now for a green to form after a red, the price has to first catch up to this point, which is 1 rupee in the positive direction, and then again 1 rupee up to 1248 for a green Renko to get formed. So that's what I'm trying to say. A green after a red requires twice the movement of brick size, and a red after a green, okay, uh, also requires twice the move in the downside, right? So these four key points has to be kept in mind every time looking at a Renko and theorizing or forming a strategy in mind. That a green brick forms after the price moves up by a brick size, a red brick forms after the price moves down by a brick size. A green after a red is found when price moves up twice the amount of brick size, right? So if your brick size is 1, for a green to form after a red, instead of 1 rupee, the price has to move 2 rupees for a green to form after a red. Okay. Now a red to form after green, exactly same thing. Price has to drop twice the amount of the brick size for a red to form after a green. Right? Are we all clear here? You can just write in chat. Anybody has any doubts? Just let us know. So the time frame, all those things will be covered. Which type of candle, time frame, 1 minute, 15 minute, and all of that will be covered. First, let's get this clear, right? Great, everybody is clear now. Great. So moving ahead, right? Next section. Now that we know when a green forms, when a red bar forms, the we have to understand why this forming is being done and what is the whole mindset and the agenda behind using a different chart itself, right? There are so many chart styles which you can see. There is Hekenashi, Kagi, line break, Renko, but Renko has a special property, right? It removes out all the noise that you see in candlestick. Okay, by noise here what I mean is the price fluctuations, right? So example is this: if the stock moves up 1 rupee here, then one small like 10 paisa here, then again for like opens, gaps up and opens and then falls down 2 rupees, you cannot actually quickly at a glance say where the trend is going to be, right? Because there is too many ups and too many downs, and even a single 1 paisa down, or sorry, 1 tick 5 paisa down will cause a red candle to form, and a single 1 tick down, up, will cause a green candle to form, as you can see here, which is being highlighted, right? So now the challenge which Renko solves, it removes all of this minor candle formations, right? Now obviously there will be disadvantages because these candles are not being accounted for, but let's just focus on first understanding the feasibility and the reasoning behind Renko, right? So again, Renko removes all of this minor flat small candles which are forming. Okay, it captures the price trend movement either in upward direction, which is bullish direction, or downward direction, which is bearish direction, at a glance, right? So that's the point here the Renko is trying to show, that no matter how many times the stock would have moved up or down, right, the Renko bar will only form once the brick size amount of movement has happened on the upward direction, right? So now again, what is Renko trying to do? It is trying to filter out minor price movements and helping visualize price trend formations when compared to candlesticks, right? So okay, so now Now that this is clear, why Renko was invented, why Renko was created, that it helps you visualize clearly. We have to understand better dynamics of Renko. When I say better dynamics, at what times does it form, right? Does it form at all intervals properly or not, and things like that, right? So to understand that, okay, let's go to the next slide. So people generally say that, okay, so if I have a 1 hour, here it's just random, I've just kept 1 hour as the candlestick time frame. What this 1 hour signifies is every 1 hour a candle gets formed in candlestick, right? What that means is whatever is the first trade that happens at the opening of this hour, which is at 12:15, if you can see at the bottom, 12:15 p.m. Okay, 12:15 hours, the first trade, at what price it happens of this hour is the opening price. The last trade at which the hour ends, at which is 1:15 p.m., is the close price. High is basically the highest price at which the trade happened within this 1 hour span is the high, and the low is again the lowest which happened this 1 hour, right? Now that we understand how a candlestick is formed, and it, so basically now, because a candlestick is sampled, when I say sampled, is formed at every fixed time interval, which basically means at every 1 hour in this scenario, right? You have a candlestick at some points in an hour, no price movement would have happened, and you will get a very flat small candlestick, right? Okay, now that we know this information, let's look at it from another perspective. Now when you go to Renko, which is the another perspective, the price forms once the the brick forms when the price movement has happened, right? Now now let's say for 2 hours in this scenario, if you see here, the market was barely flat, it didn't move up the brick size we desire, it didn't move down the brick size we desire, right? So no Renko gets formed, right? And hence people say Renko is time chart independent, right? People say that they do, it's not required to have a fixed time for a Renko to form, which in some ways is correct, but not entirely, right? So a Renko gets formed irrespective of the candle interval once a price movement has happened, correct? Now that everybody is clear here, uh, is the tricky part, right? Let's consider this case which has been mentioned in the slide. If you choose 1 minute candle, okay, and 1 minute candle interval with a brick size of 1 for any stock, let's say a stock XYZ, and the stock moves up 3 rupees in 3 minutes, basically 1 rupee every minute it is going up, and then after that, next 2 minutes it keeps falling 1 rupee down, 1 rupee down, okay? In this scenario, the Renko chart that will be formed is shown on the right side, right? Now keep in mind, brick size is 1, the candle interval which is being used to form this Renko is 1 minute candle. So you have one green Renko, one green Renko, one green Renko, and then one red Renko, because 2 rupees down movement, right? Now if you change that exact same thing to a 5 minute candle, okay, the net movement that the stock has had is actually 1 rupee in the 5 minute span in which you are forming a Renko in this case, or a candlestick. The price has moved for first 3 minutes up, and then next 2 minutes 2 rupees down. So the net movement that the price has moved, or the stock has moved, is 1. Okay, what is it? It's 1. So in that scenario, only one Renko bar is formed. Now you can clearly see that time plays a very key and crucial role when forming Renko. Okay, although formation of Renko, which has been explained here, doesn't have time mentioned anywhere, but the price movements which are captured are anyways captured by a candlestick. Now if your candlestick is of a longer period, the price movements are consolidated. What I mean is it's basically accumulated, right? So again, for those people who missed it, uh, for those people who missed it, if the stock moves 3 rupees up in first 3 minutes and then 2 rupees down in next 2 minutes, if you use 1 minute candle with one brick size, there will be three green Renko bars formed or bricks formed, and then one red brick formed, correct, which is shown on the left side. Now if you just change that candle interval to 5 minute, right, the 5 minute candle will just be a 1 rupee green candle, correct. Now that will cause only one green Renko bar to form. Now the patterns look totally different, correct. So that's the key point. Although time is not required when forming Renko, the price movements being captured to form a Renko are time dependent, and hence it's very important to while building strategy to keep in mind what time interval you are using to visualize a trade, what time interval are you using to trade with, right. Now people are typing boxes disappear, there is repainting, permanent boxes, all that will be covered, right. Kindly have patience on that. We are just getting started, right. So now that we know Renko has a significant, the time plays a significant role in strategizing with Renko, let's move ahead, right. So the next part is Renko charts repainting, right. Renkos are very notorious for repainting, and people get fooled by seeing green bricks form and take a trade, and then suddenly that green bricks disappear. That is because of the entire platform at which people use Renko is not sort of, doesn't have discipline sort of ingrained in this platform itself, right. What I mean by that is this: if I just switch to the charts here for a moment and just look at the candle that is being formed here, now it's a partially formed red brick, right. Now if the price moves let's say 2 rupees upward in the upward direction, a green Renko bar will get formed, and I'll be too quick to jump and take a trade, right. But now this is a live forming candle, the hour still has not closed, right, the sun has not set. What I mean by that is, when the price is moving upwards, until the candle closes, any decision that is being made can be reversed if the candle suddenly closes at a lower price, right. That's where the torture comes. Okay, so if I have to show again another chart, let's say, what I mean by that is, again, for those people who have missed, see, when the Renko is being formed, right, let's say this Renko brick formed 1 hour back, correct. Now when this Renko brick has formed, let's say the price sort of starts to trend again and moves up 2 rupees, okay, because our brick size is 2, sorry, brick size is 1. If it moves up 2 rupees, a green Renko will get formed, but the candle has not closed. And until and unless a candle has not closed, and if you take a decision on it on Renko or even on candlestick, okay, based on technical indicators, it is subjected to change. And because it is subjected to change, a crossover that you might have found, okay, before the candle closed, might disappear. A Renko bar which you find might disappear because the candle actually once closes, that's where a permanent Renko gets formed. Same way a permanent crossover gets formed. What I mean by that is, people keep asking me a lot of this, where they say, why shouldn't we trade with live markets, and why shouldn't we trade with LTPs, right? The point here is this: let's say this candle was the currently forming candle, the 10-15 candle. Now this crossover appears to form. Now if the price would have and I would have, let's say, taken a trade in between the hour itself, because I saw a crossover to form here, right. Now if the price suddenly goes back, this crossover would disappear, and when I come back after the market closes, this crossover was never there, but I still took a trade. Which basically means, if any kind of analysis or trade is being done, technical analysis or trade is being done without waiting for the candle to close, all the signals can disappear. It's not just Renko. Renko has gotten a bad name because the candles are very apparent, but a simple crossover, MACD crossover, which is being shown here, right? People forget generally about it, and Renko is a chart type, right? That's why. That's why people sort of give it a bad name. But if you wait for the candle to completely close and then form a Renko, right, then it will not face this issue, right? So again, we have clarified here. The solution is that reading Renko properly, which is taking like brick size seriously, and once the candle is closed, the last three words of this last statement is very important. Am I clear to everybody till now? I know people are asking a lot of questions on strategies and things like that, and I will cover intraday, swing, all kind of 111 sample strategies in few minutes now. Kindly have patience. Just let me know if everybody is clear till now, because lot of things were discussed and I want to understand everybody is clear. Range bars are slightly different than Renko, Avinash. We'll cover that once we have that released. Ravindra Kamath is asking, can we repeat? Right. So again, this webinar is recorded. You can always go back and see. This will be made available, right? Great. So how? Okay. So Finny has asked how we know the candle is closed. It's very easy. If you are using a 1 hour candle, you can see that our candle forms after 1 hour, so you know that the candle is closed. So a 9:15 1 hour candle closes at 10:15. So if your watch shows 10:15, that means candle is closed. If you are looking at a 15-minute candle, let me just change it to 15-minute candle, right? So if you are looking at a 15-minute candle, if a can so I'll just show in candlestick, which is better to understand this, right? So you can see that a 15-minute candle closes every 15 minutes. So if the opening time, which is mentioned here as 1:15, it closes at 1:30, right? 15 plus the opening time. Great. Now moving to much more debated paths where people are asking for that in chat and they are waiting for. Okay, Renko brick size will be covered, ATR and various ways are there, and I will explain how each has its own pros and cons. Okay. Okay, let's come to this strategizing with Renko. Now, because Renko is used to identify price trends, I am clearly mentioning it's not trends, it's not momentum trends, it's not long term trends, it's just price trends. The reason behind that is Renko doesn't account for volumes. So, if you go here, plot a Renko chart, right? Sorry, in Renko chart, if you just plot volume, right, volume chart, you will just get a flat line. There is nothing, no volume bar being shown down here, if you can see, right? The reason behind is when Renkos are being formed, when the Renkos are accounted for a price movement, you cannot differentiate with a candlestick or with the data you have that at what price how much volume got traded. So Renko doesn't account for any volume based momentum, any kind of those things. It's just price trend indication, right? So there are a huge number of strategies that can be built, but on a high level they fall in these four categories: price action strategies, momentum strategies, strategies, support and resistance, and zone strategies, right? Again, price actions are basically anything that has to do with open, high, low, close, patterns, forming there, and drawing a line and things like that. Momentum is basically using a momentum based indicator with Renko on Renko to form that. Okay. Um, um, so somebody asked very good question. Can we use volume profile? Mansoor Azad asked that. Actually, no, correct. But let me just go ahead. So third is trend strategies. Fourth is support and resistance zones, which I explained. Trend strategies again using trend finder indicators, using trend strength indicators with Renko will basically form your trend strategies, right? Now, each of the above strategies can be configured for intraday swing and positional in Renko with ease by easily setting its candle interval and brick size in the right manner, right? The point of this entire webinar, okay, from here on is to convey the thinking and the working of Renko and how you should go about thinking when building your own strategies. The strategies that are being created here, right, are sample and are just for educational purposes. Keep that in mind, right? We have back tested, we have created some samples for you to understand, but you can take the same learning, same principles, and experiment and identify your own strategies, okay, which will be very good, which can be, if you do it the right way, if you just think about it right way, right, spend some time, you can create your own strategies, and streak lets you do that in minutes without having any problems, right? Great. So now let's get started with all the information that has been told, right? Let's just get started in actually building uh, a Renko strategy, right? Before I just get started, let me just answer one or two questions. So Kushal Patel is asking, what type of investment is better, fundamental or technical? What should I study? So depends on your trading style. If you're sort of uh, long-term trader, or you buy stocks and hold for a couple of weeks or days, you should also look at fundamentals with technicals. If you hold for a very long period of time, you can look for fundamental data. And if you are intraday or a swing or a positional trader, you should pay attention to technicals. You can look at fundamentals to filter out stocks on which you are going to apply technicals, right? So now let's get started with the first strategy. Okay, so first strategy is a simple price action strategy. Here we buy when we it's a bullish strategy. Here we buy when two green Renkos are formed, and sell when one red Renko is formed. Again, for those people to like to explain it very quickly, let me just plot SBIN. Okay, I'm just following what is just mentioned in the strategy here. I'll explain why and how to find your own strategies very easily in few minutes. Just give me a minute. Let me just make my chart sort of same, right? And I'll just remove MACD because that's not required currently. So here the strategy is buy after two green Renkos, sell after the first Renko, right? Keep in mind the prices that you see here are not the actual prices you will get, because the prices here are Renko brick prices and not the underlying candlestick prices. So if I just type SBI in here, I'll just open candlestick as well for side by side comparison and better explanation. Okay, let me just do here, right? So as you can see, this is today's 3 minute candle chart. You can see a lot of price movements, but if you see it in Renko, from today, it's just basically one green and then it's all down. Okay, but if you see here, it's basically because the first candle was green, there's one green Renko there, and after that this price has slowly gone down, which has been captured by Renko. Now it's very difficult to say the trend of the price just by looking at it, but it's made very easier by looking at the Renko. That's why Renkos are famous, and that's why they are very good tool to know about, very good tool to use while building strategies, right? But uh, there are a lot of pitfalls with Renkos. Kindly make sure you understand every single small bit of it before you start trading with it. Great. So that now we are here, right? So again, the strategy is to buy when two green Renkos are formed and to sell when one red Renko is formed, right? So let me go here. Let me just start creating a strategy, right? So I've clicked on create. Let me just add SBIN. So the kind of stocks I'm adding are purely random. Now the kinds that we sort of the kind of stocks that I'm trying to add here uh, are supposed to have some kind of price movement. They should not be purely flat or completely swinging stocks. Okay, they should be like good liquid volatile stocks, right? I'm adding Tata Motors with a very specific reason here. Tata Motors has gone down, okay, by a significant amount for last 3 months. But the reason why I'm adding here is to show that even with a bullish strategy on a bearish stock with a Renko, a good strategy can be made with a good return according to backtest. Okay, keep in mind backtests are not backtests do not guarantee any future returns. They just do hypothetical trade and let you know how much water your strategy holds with the past data. I'll just add Canara Bank, NCC, any other stocks you guys would want me to add. Obviously Nifty, somebody is asking can I short Nifty. I'll try to cover if the time is there, right? uh, okay, so let's just say quantity 10. Okay, we have a very simple easy assist feature for those people who don't know which indicators, sorry, how to use an indicator. Just do assist and type. This strategy is being created on streak, so for those people who already are familiar with streak, it will be very simple to understand. uh, so again, our strategy was buy when two green Renkos are formed. So I'm just saying close higher than open, which basically means the latest formed Renko bar is green, right? Okay. Palani K has asked HDFC. Somebody has asked Coal India. I can add Coal India because the price range of the stocks that are added here are sort of in the same range, whereas HDFC is a thousand plus rupee, or like is a high rupee stock, whereas SBI is around 200, 300. Basically, Tata Motors is again sub 500. All these stocks are 500 below. So the brick size will play a crucial role. That's why I want to keep the stocks. Okay, I'll add Tata Steel because the prices are basically in the same sort of same zone, right? Because the brick size which we are going to add will play a very crucial role, and hence that is the thing. I'll cover that also in depth. Kindly just hang on. Okay, there's a lot of data that is being covered, a lot of information that is being covered. So okay, so let me just quickly explain after just typing this what I just typed here. So this is a simple, very simple basic price action strategy with Renko, which basically says two green Renkos I want to enter once the second green Renko has formed, right? So it will enter the after this second Renko bar is formed. Okay. So how do you say that? The latest Renko is green. You can just say by saying close higher than open. The previous to that is green. To say that, you just have to say previous close higher than previous open. Close higher than open because close price should be higher than open for a green Renko to exist. Correct. Now, as discussed, exit is basically close lower than, okay, or crosses below also you can use, but I'll explain why cross below is a bit dangerous with Renko in the pitfall section. So I'll add a stop loss of 0.5%, take profit of 1% to stay in line with the strategy screenshot that is being shown here, because why not? So I'll say price action simple Renko 1, right? Again, to select Renko chart type, you need to be on the ultimate plan, and you can go here in advanced settings and just select Renko. Now the brick size I'm going to select here is 1, okay, because again the chart shows here 1, but I'll show you how the brick size will change how the brick size will change the backtest results drastically. Pilani was saying there's no display. Kindly check your net because other people can see. Is there's no display? Other people are able to see. Kindly let us know on the chat. Okay, so yeah, one person pointed out it should be previous close higher than previous open. My bad, guys. Thank you for correcting me. Previous close higher than previous open. Okay, great, beautiful. Now let's get into the backtest directly. Now that this backtest is running for last 3 months, you can see the date from 5th October to 2nd of Jan 2019 for 3 minutes period on a Renko brick size of 1. Take profit is 1%, stop loss is 0.5%, right? When using Renko, I would I would say always spend time in analyzing the trade log, which you see here. Without trade log, don't trust Renko at all. Okay, no matter which platform says that, always make sure you view the charts and you verify at least the last 10 or 15 column rows in the trades. Okay, now again, we ran the backtest just now, right? Okay, let me just minimize this so we can see all together. Great, so we have somewhat mixed results, although everything looks green except for Coal India, right? uh, Also Coal India is again moving around the same center line. We'll come to that just a moment. So yeah, we see that the backtests have run with somewhat green results, but there are very important points that are being conveyed in this um, screen which you see, which many people, even the experts, miss out, which is the max drawdown, which is shown here. Max drawdown shows the risk that your strategy has for this Renko, right? Now with Tata Motors, okay, this strategy performed phenomenally. So in this period the stock has given negative 21% returns. Okay, what that means is if you would have bought on 5th October and sold the Tata Motors one share today, you would have lost 21% of the capital. But according to backtest, if with this strategy even though the stock is going down and the study is a bullish, which is basically a long or a buy or a upgoing strategy, right? Tata Motors has given 11% returns, right, in the back test, obviously. But the key point to keep in mind is the max drawdown, the risk that was associated during this entire backtest was 1.86%, right? The lower the max drawdown, irrespective of its sign, okay, forget the sign, irrespective of sign, the lower it is, the less risky the algo has been, at least in the backtest for this stock. Keep that in mind. Now let's look at the win loss ratios. Obviously, the definition of what these individual metrics mean has been covered in our first webinar in depth, so I'll not waste everybody's time by sort of going that. Let's cover Renko in depth. But again, the win to loss ratio is basically 2:1, because take profit is 1 and stop loss is this. The number of wins versus number of losses, the accuracy is about 50%. So every time two green Renko bars are formed, there is a chance that the price will move towards your direction. That's what it means, right? Also, one more key thing, okay, you see that the type here is MIS. Right now, MIS requires a square off to happen. Now you see many trades are entering and exiting the same day, which is well and good. But if your brick size is too big and there is no Renko formed at 315 for, right, then the system will not be able to square off. This has been clearly explained in our manual, okay, for those people who want to dive into that. But let's go ahead. So yeah, Tata Motors gave better results. Now let's look at SBI. And okay, somebody had asked for Coal India. Let me just explain that, right? So Coal India fell 11% down, whereas the strategy only lost 0.91%, right? Which basically means about 1%. But the max drawdown was high. Now, what it means is the algo was risky, and the Coal India price movement pattern doesn't sort of stick with the whole pattern that we are trying to create. Coal India doesn't show that kind of pattern, right? So now let's look at NCC. NCC gave 17%, which is an extremely bullish result in this 3 months period. And here the stock gave, sorry, here the backtest gave 15%, which is very good, which is somewhat close. Right. Let's look at Canara Bank. Canara Bank gave 23% positive return, right? And here the strategy gave 17%. So again, this is just an explanation of a simple price action strategy, right? Let's see Tata Steel. Okay, Tata Steel gave negative minus 19%. Sorry, minus negative 11.19%, and the strategy gave 1.68%. Now if you see the chart pattern which you see here, which is basically the PNL curve, you see that the profits went really good, like they went high, but they fell. So at the peak the profit was 423 rupees, and you at the end we ended up with $100. The reason behind that is Renko works good when the price movements are significant and not very flat. So once they start to flatten out, Renko sort of starts losing out its whole motive and whole purpose, right? So keep in mind to apply Renko on the right kind of stocks, right? So now that this simple first strategy is done, let me just quickly show you how the results will look if you just try a different candle size, different candle interval. So SBI in 13%. Let's just see, Tata Steel from positive went to negative, although same chart pattern, same PNL pattern, but max drawdown increase. Tata Motors still held its ground, okay, because the price movements are very significant directional. Canara Bank, okay, right? So now people ask, why don't we give here the ability to just put ATR, right? I'll just cover this here and then I'll go it in depth when we go to the last part of the page. So people see now. So if you plot ATR with a Renko bar, the brick size is calculated based on the ATR 14. Okay, let me just put ATR here. Average true range is what ATR stands for. Right now, the average true range keeps changing every single once every single candle is formed. Now, when you are just seeing ATR, when you are using ATR 14 to form a brick, right? The brick size keeps changing every time you load the chart. So if you run a back test now, and then if you run a back test after one day, let's say with ATR value, the results will completely differ and it's not a fixed value that you can optimize on. ATR will keep changing. Now this change is what fools people into people thinking that Renko always shows the most optimized value, right? Always shows clean uptrends and clean downtrends. The thing is if you use ATR, it anyway shows the true range in which the stock has moved. And if you know how much the true range the stock has moved, you optimize your brick size to that, your chart will always look pretty. Now if you come after one day and use the same old ATR value which you used yesterday, your chart will not look great, right? Then because if you just use ATR, it will just automatically change. So ATR is just sort of gotten into people's mind to basic people, so that because they were always looking at charts without having the understanding of how things were actually working and how things will work in practical scenarios when actually using Renkos to trade. ATR is a great thing to understand and visualize for people who are doing analyst work, right? But people those who are trading, the practicality completely goes out of window if you just purely rely on ATR or any form of dynamic candle formation, right? So one second, so let me just show here what other things are there. So there is here, if you do auto select, Kite automatically has something called caveman algorithm, which basically instead of 14 period ATR uses a 200 period caveman formula to find the amount of movement the stock had done. And because you are anyways relying on old data to form the brick size, your charts will always look neat and always showing uptrends and downtrends. You will not see this one red brick form and then green, because if you choose the with ATR or something like that, your chart will always be like green, 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 and red, 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 red. But that is like that only because you have chosen a value that will fit it, that will match that, right? But if the price starts to move in any other direction, right, it will sorry, if the price starts to move in different direction or different ways, you automatically, if you apply ATR or things like that, it'll just keep adapting to that and keep always making your chart look good. But that is not reproducible. Okay, that's why we don't put it. I'll cover it in depth once we go to the other section, right? So now this is first basic price action strategy. Obviously, key points to notice: the time interval here is very, candle interval time is very important with the brick size. I'll cover how brick size are chosen. Please show with any live chart. So again, all this is live chart information only. I don't understand the question there. So here for this backtest, I'm using brick size one. How did I come to this brick size, right? This brick size basically is, so to choose brick size when you are entering it manually, right? It's a lot of trial and error, but it's the thing there is you can use some rules of thumb to do that. I'll just cover that once I cover some more strategies, right? So key points to note: the right combination of candle interval and the brick size and take profit and stop loss are very crucial when using Renkos, beat any kind of strategy. Here I've just written that for price action. Now the strategy 2, okay, this is going to be a momentum based strategy with Renko. Okay, for those people who want to sort of use momentum indicators with Renko, this I'll cover that in this strategy, right? Again, let me just add the same stocks so that you know that all of this is stock independent, but the brick size and the candle interval you have to optimize for the stock. And how do you optimize? If you just see charts, you don't know anything, right? You don't know whether that would have worked in past or not. But with Streak's back test, you can easily pinpoint which brick size, which candle interval is working best for which stock during what kind of movement. If a stock is going bullish, if a stock is strongly trending, if a stock is going sideways, what is the right kind of brick size and candle interval that can be chosen for? Okay. Let me just say SBI, Tata Motors, NCC, Tata Steel, somebody had asked, right? What else was there? Canara Bank, right? Let me just stick with the strategy. So here, the strategy is close crosses above open, which basically means a green Renko. Sorry, close higher than open, which basically means a green Renko bar, and two RSI crosses above 50. right? So let me just plot this here for people to see. Somebody was asking, can you show live chart? This is live chart. This is actually live. I'll just plot RSI. I'll just put period 2, and here I'll put 95 and 50. Again, these zones are very hypothetical. I'm just putting these zones because I just want to say that if a green Renko is formed and the price has crossed above uh, the 50 line which you see here, I want to take a trade, right? So I want to see, I think that the momentum is starting there, right? Again, you can see that happen every time, and it's a good way to analyze and understand. Obviously sometimes it would have not happened, and we want to avoid those kind of scenarios. Example is here, right? We would not like to have entered here. Now this is, once you change the Renko candle size, this will keep changing. You can obviously look at that here. So let me just put, instead of this thing, just 0.5, right? So obviously the pattern changed, right? So I have more false trends which can be seen here, right? So I will try to avoid this with this back test, right? So again, coming to the strategy, I'll just select the same candle interval, which is 5 minutes. This slide will be made available for those people who are asking that. The slide will be made available. Okay, so you can sit and look and analyze and recreate and experiment, right? So I'm just saying RSI. Okay, first it was the green Renko bar. So let me just say that close higher than open, and RSI 2 crosses above number, I'll say 50. Right, these levels can differ based on the amount of RSI you are choosing for, the amount of periods you are choosing for, things like that. Right now, now I am selling when so here exit is very crucial again. I'm looking at 2 RSI crosses above 95 and I'm exiting. What I mean by that is, I'm just showing in the live chart. If my RSI crosses here, I'm exiting the trend, because this gives me that, I'm just saying, whenever the price moves to over what is that, overbought region, I'm just exiting. I could also exit by just saying a red Renko is formed. I can try that. You guys can try that, right? So let me just say that price close lower than open. So I'm just saying when a red Renko is formed, or when 2 RSI, okay, 2 RSI. Somebody is asking Nifty, please. Sanket is asking. I'll just try to cover at the last 5 minutes. I'm allocating for that. Across above number, and I'll just say 95 here. Again, these values are completely hypothetical. You can choose the value that matches your level of RSI, your value, right? So I just said crosses above. So I'm just exiting whenever the price moves into overbought region and the close is lower than open, correct? So I'll just add again 0.5 stop loss. I'll explain why I'm putting 0.5 and not 1% as stop loss and 1% as take profit. Because see, 0.5% of, let's say, SBIN, which is a 290 rupees stock, is about 1.5 rupees, right? And I'm keeping that in mind, and my brick size is 1, right? So I'm keeping that in mind, that hey, my stop loss should be close to the brick size, so that if even as soon as one Renko bar downwards is formed, or the price movement against me happens by about one brick size, I'll exit, right? So I'll just give it momentum Renko sample 1, and I'll just click on advanced. Okay, and I'll just select Renko here again. So now I don't know how the results would be, because I have added one additional exit condition, but let's see. Right, so again, here keep in mind, this is performing better than the simple candle pattern that we saw earlier, okay, at least on the majority of stocks. Now, how am I saying performing better? Because the number of trades are less. The lesser the number of trades, the less time you're sticking your head out, okay, less time you're putting your money at risk, and it is still giving similar if not much better. I mean, it is still giving better results based on what I can recall. The max drawdown has fallen to 1%, right? Now, with Tata Motors, as of what we can see, one brick size Renko is working really great. Now, again, why one brick size? It is close to 1% or 1.5% of the LTP. Again, I'll cover those things. Okay. Uh, Okay, so let me just say here, period returns negative minus 21%. Okay, still when using a buy, when buying a falling stock with Renko, okay, we still are able to get somewhat good returns, at least in the back test, right? Now the number of wins to loss ratio, number of wins versus number of losses has improved. Winning streak is significantly improved. If you start winning, you win 6 times in a row, right? At least for Tata Motors and NCC as well, right? But NCC was a strongly bullish stock, so anyway, the strategy has to work on a bullish stock because it's a bullish strategy, right? SBI works well. Tata Steel, let's look at it. Although I mean, somewhat went bad. I mean, that pattern, that level of RSI would not be the one suited for Tata Steel, right? We would have to look at Tata Steel chart and figure out what is the right values, right? So Vijendra is asking, Renko is too much complicated strategy. Actually, it's not. It's just more natural. So if you just spend, if you, so it's like this too. If you invest some time in Renko, right, to understand, it comes naturally afterwards. And yeah, again, very good point, Sonu. The number of trades are less, so the number of brokerage is less. The amount of brokerage which you pay is also less. That's actually a very genuine and a very good point, right? Again, max drawdown, which shows the risk and the amount of fluctuation your portfolio can face, at least in the backtest period for last 3 months, is less, right? Now we are quickly running out of time, so let me just move to third strategy, which is basically this is a trend strategy. So trend with Renko for those people who have asked, right? So we have covered two strategies: price action. The second one was momentum. Now this is trend strategy, again adding same stocks, right? NCC, somebody asked NBCC also. NBCC, let's just add that for fun of it, right? Okay, let's just form the strategy. So here basically it's 5 minute candlesticks. Here the strategy again. Let me quickly explain the strategy. Arun basically shows the trend strength. Okay, trend strength basically means how much is the trend going. Like what is this technical indicators thought on the price trend, right? So I'm just saying. Let me just plot Arun quickly here. Uh, Let me just move this and just say Arun. Okay, what is the period of Arun? 14. Okay, great. So let me just remove one extra Arun which got added, and yeah, we are in. So again, this is a very simple Arun strategy. Just a moment, there was a glitch. Okay, so a very simple Arun strategy is this, right? I'm just saying I want to buy when the Arun value crosses above 95. So I cannot draw a line here. Actually, I can draw a line here. Just give me a minute. I know this is a bit time consuming, but it's required to understand it very well. So I'm just drawing a horizontal line of 95 here. Okay, so this is, yeah. So I'm just saying that whenever the Arun 14 value goes above than this, I want to buy here. Okay, in this case, I will buy here. So I'm not buying too early. So in price action, I would have bought here and I would have lost money, right? Whereas in Arun, I avoid this false price action signal, or at least chart pattern signal, right? And I am only taking trade when the trend is strongly defined by Arun itself, right? Arun indicator again, it is an we will cover that indicator in upcoming webinars in depth, talking about its technicals. Again, so I'm just saying 14 Arun up higher than 95, so I'll just say Arun up 14 higher than. Okay, keep in mind I'm using higher than and not crosses above. That's a very important thing which will be covered in pitfalls. For those people who are watching, kindly watch full, or those people who also watch later, kindly make sure to watch from starting to end to understand the full knowledge, because if you understand half, probably the practical implications when you apply it might sort of, you might miss out on certain things which could have played a key role in defining how the strategy would work, right? So again, Arun up higher than 95, Arun lower than 95 is when 90, sorry, is exiting. What it means is I'm going to exit here as soon as the price crosses, or is the Arun value becomes lower than 90, right? I'm just exiting here so that I don't wait for too long, okay, to sort of exit. Right, so that's my exit. Always make sure when you are using Renko to have an exit condition in place, not just take profit, not just stop loss. Keep sure to have an exit condition in place, because with Renko, I mean, you have to be careful with that. Again, exactly same thing. The reason why I'm keeping exactly same thing is you can see the uniformity, right? I'm using different kind of strategies, okay, from price action to momentum, etc. Right, but Renko is being consistent in price trend identification. That's why I'm keeping all the parameters exactly same. Right. Again, here this is a trend Renko sample. Right. So let me just see if everything is filled. Yep. Great. While the backtest is running quickly, guys, if you have any questions, just ask me. I'll do a small Q&A at the end. But if you guys have any questions, you can ask me anyways. Right? Somebody who had asked NBCC, it gave a phenomenal result. Okay, very few trades, 8 trades, out of which 7 were win. Like, I mean, this levels work really good, at least in the back test. Keep in mind, everything is back test. Um, uh, so keep in mind that. Um, yeah, so as you can see, even with brokerage, without brokerage, it is almost able to capture entire period return with 8 trades. In 8 trades in how much time? In 3 months, right? So somebody who had asked NBCC, I mean, this strategy works really great with that. Again, Canara Bank, everything. I mean, it's again similar things. Here you can see the number of trades is 27, which is less than the previous one where it was 34. Right? Again, less number of trades, almost. I mean, I would say 55 to 40% of wins to loss ratio. Winning streak, losing streak are almost same. Max drawdown on is 1.9%. Make sure you always verify transaction table. Okay, kindly make sure always look at the transaction details table, compare it with charts, and make sure that Renko is performing as you want it to. Okay, great. So now that this strategy is covered, yes, Sonu, I will cover Nifty. Please just wait for the last 5 minutes. Almost 3 strategies are covered. One more is remaining. Right. Let's look at the next one. So again, key points to keep in mind is the brick size, the candle interval, and TPSL are very crucial. Uh, Care has to be taken when using crosses over and crosses below. Again, that will be covered in Pitfall. This is the very so this is support and resistance strategy. This is a very big strategy, as you can see in the screenshot, right? But what basically it is doing is this. Sorry, pardon me. Yeah, what basically it is doing is this. Let me just add pivot points, right? It is just saying that if a green Renko is formed through any of the lines here, you want to take a trade. So it will take a trade here when the pivot point is breached. Will take a trade here when the pivot point is breached. It will take a trade here when pivot point is breached, and so on and so forth, right? So again, you can see this strategy. You can create it. You can try it. You can do the backtest. I already have the backtest written. For the sake of time, I'll just show you those backtest results, right? Uh, Again, not everything looks pretty. So yeah, this is the backtest results for that. It's exactly same strategy, right? Um, Again, it didn't perform as good as other Renko strategies were performing with Tata Motors, and other things were like somewhat there. But again, I wanted to cover all the kinds of at least at a high level the strategies that can be built with Renko, right? Now that we have covered the 4 categories. Again, we have covered price action, momentum, trend, and support and resistance and zone strategies. Again, in each one of depth, we'll have a dedicated webinar, okay, talking about each strategy in depth and why they are built the way they are built, right? Now just a moment. Coming to the next and most significant part is choosing the right brick size. This is what people had been asking for quite some time, right? This is what people had been asking us for a very long time, which is choosing the right brick size. Now, when choosing the sorry, this one, yeah, choosing the right brick size, there are 4 or 5 different approaches that can be taken. One, the first one which you see is fixed amount value. Right now, what this means is basically, just a moment. Yeah, what this basically means is, let me just clear out this chat. This things is basically whenever you create the Renko, you add a fixed brick size by yourself, right? Uh, you add the brick size here by yourself, right? This is a fixed value. Okay, this is what it means by fixed value. The most preferred way is ATR, but the most stable, predictable way is fixed value. Let me explain why I say that. If you put a fixed value here, you are aware of what ATR value is used. But if you just say setting as ATR 14 and you just refresh the chart, now that ATR value 14 has changed and you don't know that, now you have to open that and see, right? So now when you are doing algo trading, or even if you are doing strategy based trading with ATR 14, every time ATR 14, or every time the chart loads, the ATR 14 will be different, right? uh, Now when every time it is different, you cannot predict how much max drawdown would have been for this big size. Will my indicators produce the same value for this big size? Because now the number of bricks itself will vary, right? So that's very important. Okay, keep in mind. The other way people choose, especially swing traders, is a fixed percentage of price, right? So I know that SBI generally moves about, let's see how much SBI moved today, right? SBI moved 1.2% today, right? On a good day, SBI moves around 1.52%. Now my brick size can be 0.75 to 1%, right? That's a price based value. Again, it will differ for different stocks, but you can take the percentage value of what a stock generally moves in a day, or basically what the stock price itself is. So this basically here says percentage of the price. The price here is 295. So let's say 300. 1% of 300 is 1. You can put 0.5%, which basically will give you a brick size of 1.5. Now the brick size of 1.5 is approximately what I was trying to catch with the stop loss also, which was zero point 0.5, right? Now ATR, I explained, ATR is straightforward. In many charts platforms, you just select ATR. Kite doesn't provide that because I mean, because of the reasons I explained. But again, ATR is sort of uh, one way to choose brick size. You just say ATR 14 period, 15 period. So the ATR value. So if I have to just show, I can probably show. Okay, you can just choose any other chart provider who is there, and you can just choose ATR value there, right? Uh, with ATR, you have to be very careful, which I have already explained. Kite has something called caveman algorithm. So if I just go here and do a display, right, this auto selects the price brick size. So here nothing populated, but let me just refresh the chart. Just a minute, guys. Here again, as you can see, if I do auto select, the chart automatically changes, and obviously a price should come here. For some reason it's not showing. The auto select basically uses an algorithm which you can Google. It's called caveman algorithm, where uh, you can basically adjust. I mean, it basically, instead of using 14 period, it looks at 200 candles to choose the brick size. So it's a bit more stabler than ATR. That's why Kite has put it, right. The other thing is right brick size based on TP and SL. Now, this last one is very crucial when doing intraday. Let's say your capacity to take a loss is of only 1 rupee and you want to make 2 rupees profit, right? Then your brick size should be somewhat less than that 1 rupee, okay, which is zero point 0.8 or zero point 0.9 or 0.75. So that is another way to look at it. Obviously, whatever I have told, you can always sort of try it with backtest and check it out, right? So okay, so somebody asked Renko with Ikimoshu, when can we expect in streak options? Really soon. We are working really hard to add as many indicators as possible, and in Jan will be. I mean, we are targeting to release Ishimo clouds and many more other indicators. Yesterday we released two more indicators or three more indicators, which is Euler Fisher and Ultimate Oscillator as well. Now, pitfalls to watch out for, right? When using crosses above and crosses below in Renko, which I tried to avoid when I was explaining, okay, you have to be very careful when creating a strategy with crosses above. What that means is a crosses above means in current candle the value is true or the condition is true, and in the previous candle the condition is false, right? Now let's say this, there is a sudden movement of price, and then there are 5 or 6 Renkos found for the same time frame. So let me just try to find that. Brilliant, it's just here itself. So you see, for the same candle time, which is 145, okay, there is 1 Renko, 2 Renko, 3 Renko, 4 Renko, 4 Renkos are formed, right? Now if you use crosses above or crosses below for some indicator like moving average or whatever the price thing might be, the crossover might happen on the second Renko bar of the same time or the first Renko bar of the same time, right? Now, when that happens, in practicality, that actually cannot be traded upon. The reason behind that is these 4 Renkos, which are formed at the time I told you, which is 145, they are always formed at one shot together once the candle has closed. Now, why candle has closed is the word I'm using, because I explained if you want to avoid repainting Renkos or or false indicators, you always have to wait for the candle to close. Now, if you wait for the candle to close, now 4 Renko bars appear at one shot, which are finalized solid Renko bars, right? Now, if the crossover has happened in the second indicator or the third, sorry, second break or the third break, the algo will not be able to pick that up. That's why you can say higher than, which basically means if the price is higher than or the technical indicator level. Let me just plot EMA so it's much easier to explain. Uh, Okay, so what I'm saying is, if you just want to buy whenever the Renko price crosses above the 20 EMA as shown here, you can just plot. You can just say 20 close higher than 20 EMA rather than crosses above 20 EMA. The reason might be is, as you can see clearly here, the first Renko is formed at 145. Second is formed at again 145, 145, right? In this, sorry, 154, 154, 154, right? So if the EMA was passing through here, where I'm trying to put my cursor through, right? If you can see slowly, I'm trying to move it gently. So if you can see it here, right, the algo will not catch that. So hence we are using higher than and lower than. That's first thing. Second, again, right brick size based on TPSL, which target or stop loss, which I explained. Okay, sorry, I think Mr. Ram, you mentioned I'm going very fast. Uh, you can always see this recording and slow it down, play it on repeat. Okay, you can take your time to see. I am the reason why I'm only going fast is because time is of constraint. Now, the third thing is backtest period, backtest trade price close to the signal price. Okay. Now, this is very specific to streak. What I mean by that is whenever a signal gets generated, for all the other chart types, the trades happen on the opening price of the next candle. Okay. If I just have to show it here, so if you read our backtest methodology, it explains once the signal is generated, let's say for a 1245 candle, the trade price you get is the opening price of next candle. Okay. Now, the reason behind that is to give you the lowest slippage and most practical price. But with Renko, we are taking the close price of the same candle. That is because when the time that you see here, the time which you see here, right, the times which you see here are the times which are basically the time at which Renko formed, the candle for which the Renko formed, and not the time at which the Renko started, right? Because there might be residual residual price movements of 10 paisa, 20 paisa that might be coming from previous 2, 3, 4 candles, which all together got added up and became 1 rupee, which was required for a brick size to form. And when that price comes, the time is sort of the close, is the last candle which was required to form the brick size. Again, I'll repeat, it was the last candle to require the brick size, the last candle required to have enough price movement for the brick size to form. That's why we have done, that's why this is being taken care of. It has been clearly explained here. For those people interested, they can go and read. Now, time shift in kite chart. So this is very crucial. This you have to understand. This has been shown with a diagram here. For those people who can't see, I will just zoom in. So kite shows the time by one offset to the left, whereas if you see any other chart provider, okay, basically they show one time to the right. What that means is kite is trying to maintain consistency and show the opening, possible opening time of the Renko. Whereas, as I explained, once the Renko closes, that is the time when Renko's time should be associated with, and that's why we take the close price, right? And that's why I am just showing this here. This is one of a very most common pitfalls, and that's why people complain they are getting signals after 5 minutes, 10 minutes instead of 5 minutes. Like instead of one candle, they are saying that they are getting up to two candles. This is very crucial to understand because your backtest is completely in line with this. Whatever you see in backtest is what we have tried to maintain when you deploy. This level of consistency when doing it by yourself cannot be done, and obviously is not being taken care when being provided with charts or any other platforms, right? The other crucial thing which is not mentioned here is square off, which I told earlier also. If you put a very large brick size and then there is no Renko formed for that, okay, uh, at 315, the backtest system will not be able to square it off. We understand that sort of makes backtest results a bit inconsistent with the practical trading, but that's because it's a backtest that's obviously supposed to sort of keep that in mind. And our research team is trying to accommodate that as well. But currently, if there is no candle form after 315, no square off will happen, right? So now these are the common pitfalls to watch out for, right? The summary of this entire webinar is Renkos are suitable to catch high level price trends and for analysis, right? When trading with Renko, keep in mind to choose the right brick size, keep an exit condition, and always choose brick size in with by keeping mind in your by keeping in your mind target profit and stop loss. Now, if anybody has questions, ask me. Uh, so before we move ahead, great. So somebody was requesting for a Nifty, bank Nifty or Nifty. Okay, I'll just do Nifty future um, Renko strategy, right? So let me just choose 3 minutes. Let me just plot Nifty, bank Nifty, sorry, Nifty here so that I can also see how the chart looks like for the day. And this is for the person who asked that. I forgot the name. If he's there, he can say hi. Okay, so this is Nifty Jan futures. Okay, I'll just go here, go to display, try to get a. Okay, so again, this is auto select, which basically means Caveman algorithm has chosen the brick size as 15, right? But let's say your capacity of loss on any single trade, if you want to limit it, this is how you should do money management, or this is how you can sort of be certain what you are putting at line to make the profit, right? So but I will change this to 10, okay, because it's approximately 1% of the price movement, right? So now that I've changed to 10, right, we will use our RSI strategy, which we as a sample because it's just a sample, right? uh, so I'll just say RSI 2, and again make it 95 and 5, right? Again I'm trying to do the exact, sorry, 95 and 50. Okay, so again what I'm trying to do here is buy, one second, What I'm trying to do here is buy once there's a green Renko and that Renko is above 50. Okay. I'm using 3 minute candle charts. Let me just see what I've plotted here. Yeah, 3 minutes. Nifty is a bit nifty, and all these indices have too much liquidity and I mean obviously volatility. So it's good to use smaller size. So I'll just say close higher than open. I don't know how the backtest would perform because of the way the price is going. Okay, so Rohit sort of corrected me. He said 1% of 10,000 is 100, which is exactly correct. But the price movement that we are looking for, right, is some. So I just explained it with TP and SL, where I have only capacity of losing $10 in a trade, right? That's which basically means which basically means I think lot size is 75. So which basically means 750 rupees. That's why I chose that. Obviously, you can try with different values. The point here is to explain the mindset behind the whole approach of using Renko and how to use it in the proper way, right? But thank you guys. Love that you are helping me out and correcting if I misspeak. So I'm just saying if it crosses above number 95, so if it enters into overbought region, I'm just selling out, right? So I'll just say crosses above, right? Or I'm saying when a red Renko is formed, so close higher than, sorry, lower than open. Okay, I'll put the stop loss of, again, now the stop loss should be kept in mind with in line with the your brick size, right? I think I'll just put the lot size manually, and I'll just put here as, again I can put zero point 0.3 for 3 times. So sample test. So I don't know how this will perform, but let's just backtest it. So this is momentum. Thank you, Vinay. Again, all of this is completely transparent. It's with you. You can test it out, make sure it does well. Right. Again, we see that the strategy, even though, so again, this strategy outperformed the Nifty itself, okay, Bank Nifty future at least. Sorry, Nifty Jan future at least, which gave 4%, and the strategy gave 7.9% with a very small max drawdown, right? But keep in mind the number of losses incurred is higher than the number of wins, right? This is very crucial. You can always spend some time and optimize this brick size, okay, to a value which basically is suited, right? Which actually captures. So again, the brick size here is to capture a price trend. What it implies is if the price has moved by this much, a trend has for sure started. That's what the theory behind Renko's identification of price trend is. But obviously now you cannot be sure and certain of the future. There is no magic crystal ball, but this is the closest we can get, right? So again, I have increased it to 15. Now somebody said 100, right? I can always do that again. So now with 15 as my brick size, my win number of wins and number of losses became closer to each other, right? This is very significant. I did nothing. I didn't change any of the strategy. I just modified the brick size, and now I have more wins than losses, which was not the case previous to this. Okay, this is my time, guys. Feel free to write to us at support@streak.tech. Feel free to tweet with at streak tech if you like this session. Kindly let us know if you have any feedback, any thoughts on further sessions. We will basically make, Manish, we will cover Fibonacci retracement strategies also going ahead, and there's much more coming. So kindly stay tuned. Let us know, show us your love, right? Happy New Year, guys. Bye bye.